Todd Fitton, we're back again for a Talks with Todd the Lender. Thank you so much for being here today. We are wrapping up the second month of the year, so fill us in. What's going on?
Oh, all kinds of stuff's going on. We kind of picked the right time to have this call. It's been in the news lately. The interest rates are on the rise, which is really about as much of an understatement as you can possibly have right now. We have seen interest rates climb in the last week, about 0.5% in interest rate. Sounds scary, sounds horrible, but I can assure everybody that's watching or listening, that still means rates for FHA they're still a 2 in the front, so pretty phenomenal still. And then your conventional interest rates are still going to be somewhere in the mid threes, which is still fantastic. We're just really starting to see a correction off of all of these crazy, insane lows that we've had, just with some things that are happening with inflation on the dollar and whatnot. It's starting to correct our market back. We're starting to see some of the states open back up. I mean, even if you look at the stock market, some of the stocks that you're seeing improve are going to be your AMCs, which is your movie places, Carnival Cruise Lines, all of the different hotel resorts in Las Vegas. You're starting to see their stocks go up. So there's a lot of emphasis right now on a slow reopening, which is it's causing a lot of confusion. Inflation is a big concern right now. And when there's inflation, the easiest way to combat the inflation is to increase interest rates. But not the end of the world. I say this strictly from an educational standpoint, that if you're on the fence, buy now. Now is always the best time to buy, especially when we're in an environment where interest rates are going up. You're still going to see a lot of flexibility for spending when it comes to how much house you can qualify for. And it's a great time to buy.
Absolutely. No, thank you so much for clarifying that. I was going to ask you too, kind of spinning off of that. So how are you answering the question, are we in this big bubble that's about to burst?
Let's revisit the last bubble that most everybody can remember, which was 2006, 7, 2008, that time frame. When that bubble burst, we had a stupid amount of inventory. There were houses that were half built by these builders that just sat and ultimately ended up getting torn down, or somebody else came in and bought them off of auction and finished them themselves. But we had so many houses for sale at that time that when that bubble burst, it was interest rates rose, but we're talking rose from like 4s to 7s. And then we had inventory that was there was so many homes because everybody could sell their home and go and buy another home just by merely fogging a mirror, with the option arms that were out there and were being sold incorrectly, irresponsibly, if you will. That's what caused that bubble. That, to me, that's the definition of a bubble, is not just an interest rate change. It's a change in the overall real estate market, which is too many homes, which then crashes the price, as well as interest rates crashing and going up. So we saw those lines, that supply and demand, we saw those lines cross back negatively literally overnight. I mean, it was, I know I bought a home at the top of the bubble, and literally the market fell out from underneath us like the next day. Like I bought the house and sold a house at a peak, so it didn't really hurt me because it was just dollar for dollar at that point. But the home I bought went from $400,000 to $230,000 in a matter of months. I mean, it was really insane. But there's thousands of homes on the market. I mean, I want to say we were close to 2,000 homes on the market back then, and right now we've got less than 400. So it's really going to be hard for us to see a bubble burst. I keep telling people a bubble, I like to call it, just for metaphor reasons, a balloon. We will see that balloon will deflate. But as far as the overall health of the market, that balloon's not going to deflate super fast because we just don't have a lot of homes on the market. So supply and demand comes into play. Interest rates will go up. It's the nature of the beast. It's cyclical. It always is. But what's going to be that tipping point? Because we had a strong market when interest rates were in the 4s. we had a super strong market. So now we're in the twos and the threes. So how long is it going to take for us to get past the fours and get into the fives, or whatever that number might be that causes people to all of a sudden jump heavily back on the fence, slows it down enough to where homes start to sit a little bit longer. Right now there's just a lot of people wanting to buy houses. So I'm still seeing our market stay healthy as a whole. Higher interest rates isn't necessarily a bad thing. It's going to allow a lot of our first time home buyers an opportunity to maybe have some opportunity that they haven't had, because houses are selling for $20,000 over what they're listed for. There's 70 people looking at a home in a matter of 3 or 4 days, and there's 20-25 offers on these houses that the seller they don't need to worry about selling to a first time home buyer in that case, that maybe there's a little bit more risk with it. So it's going to slowly deteriorate that mentality. It's going to allow these first time home buyers, allow people that have been struggling getting their offers accepted, to all of a sudden have an opportunity again, and make it to where there is a healthy number of homes for the amount of buyers that we have, because we have so many buyers right now, with just not very many homes to sell them.
Yeah, absolutely. Yeah, you basically answered all the questions that I've been getting recently from my buyers. And I'm sure you've been getting it as well from your clients and your agents that you work with. And so it's so important that I have these conversations with you and we put this information out there, because I want my clients to know you can always jump on the YouTube channel. You can always watch these talks with Todd the Lender. You can update yourself in real time what's going on. So I really appreciate all that information. Do you think that rates will go up into the fours this year?
The way I look at it is, if you look almost a year ago, rates were in the fours. Then COVID happened. I mean, COVID is really was the driving factor to get us to the rates that we're at now. Rates drop with something drastic happening within the economy, negative. So COVID has been, in our lifetime, one of the most negative things for our economy that we've ever witnessed, which is why we saw the best interest rates that we've ever witnessed. So they really do go hand in hand. So as we come out of this, of the worst time in our history, you're going to see the interest rates that have been the best in our history slowly start to creep back up to where they were also. And the charts that I look at on a daily basis, if I do a 12-month look back and I look at how the bottom just dropped out of this thing, we're getting back there. We're definitely headed back that direction. But again, I mean, I was doing all my first time homebuyer loans at that time were anywhere from 4.25 to 4.625 in interest rate, and we were closing them as fast as they were coming in. So the market was healthy then. The market will be healthy later. We just really the most unhealthy part of it right now is not having homes for these people that can qualify. And then you have a lot of people right now that can't qualify because of COVID, that as things start to open back up and they meet our COVID guidelines that have been issued, they're going to start to be able to get back into the housing market also, which is going to increase the amount of demand. And because you don't just wake up one day and decide you don't want to buy a house. Most people, if they've got their heart set on buying a home, they are going to continue shopping. It may change what to them is a good deal, whatever that scenario might look like. Those things will change, which again, that may slow things down enough to where homes sit more than 24 hours. Because I mean, literally, you got a home that's priced right in this market as an agent, and you can attest to this. You show that home to enough people within 2 days that you can make a pretty solid decision on an offer and have it off the market within 72 hours. I mean, the homes are they're flying off the shelves, as we like to say. So that's not going to really change. It's just going to offer opportunity. People, and same thing on the seller side. Some of these sellers that have been kind of, kicking it around, maybe I'll sell because the market's really good right now. If they start to fear the change because of the interest rate environment going up, they may say, okay, I'm going to go ahead and throw my house on the market now. That could increase our inventory. Is it going to change it enough to where it becomes the bubble? I don't have that crystal ball, but I highly doubt it, because we are so deprived of inventory right now. Like, I don't think people can really comprehend just how short we are on inventory. I mean, we're not we use months of inventory, right? And back in the day, there was a year's worth of inventory that would sit when the bubble was happening. Now it got down to where it was like, this time last year, there was probably 3 to 4 months of inventory. We're less than 1 month of inventory. We can't even use months anymore. We're using days. And we're, if you look at those numbers for our MLS, the number of homes sold that's coming off the market is larger than the homes coming on the market. So that's how you know, and you figure contracts are 30 days. That's how you know you're not even in a 1 month environment anymore. So with that said, is this going to last 1 year, 2 years, 3 years? I don't know. None of us know. We don't know what's going to change tomorrow. We don't know how bad inflation is going to get. We don't know what this new presidency is going to entail as far as what their beliefs are. We have a little bit of history from the Obama era as far as what we might be looking at, because a lot of the same people are back in office or back in an important position, and they tend to love inflation for whatever reason. I'm not really sure why. And again, if we know the counter to inflation is the government stops spending money in order to increase interest rates, because increased interest rates is what's going to slow it down. So that's the only thing right now that I can think of, is that's what we're seeing. We are seeing a correction. COVID is slowly starting to go away. A lot of these states like California are starting to open back up. Everybody has their own opinion as to why that might be happening right now. But I digress. I'll get back on the topic here. But it's nevertheless, things are changing. It's looking more positive, which is going to send us in an upward trend on interest rate just out of a sheer correction. Then you throw inflation on top of that. So what's that going to look like? So I would say we'll just keep having these phone conversations, these Zoom meetings, and keep people informed, on a little, maybe every other week instead. And because we are in an environment that's going to be constantly changing.
Yeah, I agree. I think, we were talking at the beginning of the year doing these monthly market updates. And I think, as you're saying, we're starting to kind of have to judge it based on more like weeks, or 1 week, 2 week, 10 days sometimes. So I think maybe we'll jump on a little bit sooner than the end of next month and update everyone on what's going on. Do you have any final remarks for this particular Talks with Todd the Lender as we sign off?
I will just add to the complexity that we're dealing with what we're going through right now from a lender standpoint with these interest rates and what they've done in the last week. Is I work with people that have watched us and listened to our conversations in the past. They know that I have a company that I work with that does our forecasting, and I listen to all of their stuff on a daily basis, hourly basis sometimes. This last week, literally, we get hourly updates right now because the interest rates are so volatile. And yesterday we actually got an alert to float, which means don't worry, rates are going to get better. You don't need to worry about locking your customers in. We're going to float it. And this is hands down, this company is the number one forecaster, has been for many, many years now, as far as what the market's going to do. The market completely tanked today, made them look really silly. So even the professionals, even the people that are knee deep in this stuff and they are watching every graph and every statistic that you can possibly watch, the market tricked them. And when I say tricked them, I mean by a lot. Like what happened yesterday at closing time versus what happened by the time we woke up this morning was like 3 days of what we'd seen negative all in one moment.
Wow.
So it is definitely day to day. I joke about the fact that every day I lose a little bit more hair and get another gray hair just from the interest rates, but we will be okay. This market we're still the rubber band effect that I talk about, where things stretch and then they come back and they stretch and they come back. That's gonna happen again. It always does. Everything is cyclical. It's just how long is it gonna last now? So stay tuned. Listen to what we bring to the table, because it's pretty up to date, and it'll keep people informed the proper way with good solid statistical information.
Absolutely. No, thank you so much. So thank you everyone for tuning in. Thank you, Todd, for being a part of this Talks with Todd the Lender. So it is still a great time to buy, everyone. It is an even better time to sell. So if you obviously need any real estate needs, reach out to me and I'll get you in touch with my trusted lender, Todd Fitton of Vero Mortgage. So until next time, Todd, thank you so much.
Thank you very much for having me.